285 yield. You just have to remember the current interest rate based on the 10-year Treasury is still at the low end of the year-end forecast that we were talking about before, 275 to 3.25. So, you know what, we're right in line here, and the companies are doing great and still moving very forward in regards to what they need to be doing, and what their business of doing business is going well. So, despite this equity market correction, you really see that investors really need to be able to consider reviewing all things, including your fixed income allocation, and need to be thinking about your overall allocations in regards to your asset classes that you're investing in your diversified portfolio. You want to be able to think about how interest rates will affect your portfolio. You know, bonds have been on a bull run for over 30 years now. You want to be very careful that you're in bonds that are going to give some sort of return and not necessarily going to lose money. The Barclays aggregate index for bonds for the year is down a little over 3% for the year. Right now, if you're investing in bonds, you are losing money. And so you want to be very, very careful. You might be breaking even and still getting your coupon, but just want to be able to make sure that you have to be able to know that bonds play an important role in all portfolios, and these do provide sources of income. They provide liquidity, and really the potential to sort of smooth out that portfolio performance during these periods of equity market volatility. But you're really going to have to make sure that you're looking for bond alternatives rather than just assume your bonds are going to be just fine. So highly recommend you're looking and you're talking to your financial advisors and your tax accountants and other professionals inside your financial team to be able to just ask the question, how is my portfolio going to react in regards to interest rates rising? And make people accountable as to ask and find exactly what's going to happen. What did these investments do in the past, and how can I anticipate them to react in the future? Because we are in a rising interest rate environment. It's not an assumption. It's not a guess. We're there. So make sure that you're investing wisely in regards to that. And again, if you want to contact me, greg@farrellwealth.com, please just email me directly. You can call the station too, 219-476-9000. Lastly, just want to be able to make sure I encourage investors to really view the equity market weakness relatively as a positive for fundamental equity market trends. This includes strong economic growth, corporate profits, you name it. I keep on mentioning it, but considering these positive fundamental trends, really remaining favorable to this longer-term investing environment in equities. We're not deviating. We've had a wild ride here. It has been nuts for 2 weeks, and we're really hoping that things calm down and there is some sort of calm that crosses the markets. Even before the recent equity weakness, forward-looking market PE ratios, which price-to-earning ratios, is basically one of the factors you always look at in regards to your companies. These all declined as earnings per share forecasts increased to levels that we believe are even more attractive for the long-term investor. So that's basically what happened. Where do we go from here? And also, what actions should investors take? I hope that was some sort of help to be able to kind of give you an idea of where our thoughts are in this recent volatility. I hope, be strong and carry on in regards to your market portfolio and your investment portfolio. Make sure that you are being calm and you're looking for opportunities. There have been an amazing amount of opportunities recently. So be disciplined and be strong and carry on in regards to your overall long-term investment portfolio. Okay, so Greg Farrell, CEO and President of Farrell Wealth. It's a wealth management firm that I manage here in Valparaiso, Indiana. Clients all over the nation, and we're excited to be able to talk to all those clients all the time. If you have any questions in regards to the markets or anything else that it is financial, the show's Money Matters with Greg, and we just talk money on the show at WVLP 103.1 FM. If you want to call on the show and certainly support the show in any way, or any of the shows here at WVLP, 219-476-9000. We'd be happy to get you a media kit. and in regards to advertisements on this station. There are a number of different shows out there that are fantastic. I highly recommend you go to wvlp.org and you take a look and take a listen to many of the quality shows that are out there. In the meantime, that's my market recap here for Money Matters with Greg. I'm Greg Farrell, and happy to hopefully I helped in some way to be basically clear and add some clarity to the recent markets. We are looking forward to the end of a February that has been gross and disgusting here in the Midwest. We are happy to see February go, especially since the markets have had well over a 2,000 point move back and forth here. So happy to see February go away. We will be here next week. Happy President's Day, and hopefully you're enjoying your day off here as much as possible. Please reach out to us on Twitter at Farrell Wealth. You're also able to find all the podcasts on iTunes as well, and look forward to hearing from everyone soon. And I hope you have a very, very profitable and healthy week. We'll see you next week. See ya.